introduce the webinar in about a minute. Thanks everyone for attending today's webinar for WestStar Industrial, ASX code WS1. WSI, apologies. WSI is an Australian industrial services company operating in the energy, resources, utility and infrastructure sectors in the metropolitan and remote areas, predominantly in WA. This morning you'll hear from Rob Spadanuda, Managing Director, who will provide an update on the strong financial and operational results of the company for the full year 2022. As we welcome Rob, I'd like to remind everyone that at the completion of the presentation, Rob will be on hand to answer any questions you may have. So if you do have a question, please submit them via the Q&A button on the bottom of the screen and we'll try to get through as many as we can. The webinar is also being recorded, so if you miss any bits, a copy will be available later today on the YouTube channel for the PIC magazine, plus we will also email you a copy. Rob, over to you.
Thanks, David. Nice to be with you again. We're here to obviously put out and summarise our half-year results, and we like to use this opportunity to thank everybody for attending. If I could change slides, please. Your basic disclaimer, for information purposes only. It's basically a summary, should be read in conjunction with all the ASX announcements. I'll let you guys read that at leisure. If we could change slides. So as you touched on earlier, a brief summary about the business for those who don't know about us. We are an industrial services company operating in the sectors that are outlined in the slide, predominantly in WA, although we are starting to branch out across Australia, and is certainly an intention for us to grow into other regions. We're made up of two subsidiaries, WestStar being the holding company, and through its subsidiaries we work with clients to deliver mainly engineering, construction, maintenance services, fabrication services, and we have capability in civil works, structural works, mechanical and piping and E&I works. Those services can be standalone services or, as we're seeing a lot of, which you'll see through the presentation, integrated turnkey solutions. As I said, predominantly two subsidiaries, starting with the first one, Simpec, which is a diversified services company specialising in construction and asset management services. It has the capacity to deliver its expertise either as a partner, and achieves results with taking on major construction projects and those asset management services. Alltype is a historical business that we acquired some 2 years ago. It's the latest one to join the group, had a 30-year history, mainly provides fabrication services historically, but these days is starting to migrate more into site installation and construction and maintenance services as well, but more in the oil and gas, power generation, infrastructure, mining and resources sectors. If we could change the slide, please. that gives you a bit of a summary about I suppose, the business. What we're here to talk about today predominantly is the highlights of the half year. We've spoken historically, for those who have been involved in following us, about, I suppose, our growth story and where we've come from over the last 5 years. And the intention was to grow revenue and in turn, in doing so, deliver some profitability, which we've managed to do. And I mean, as far as a highlight goes of the half year report, we ended up with cash and cash equivalents of 28.9 million at the end of the period. Another highlight was for us, which was a very important one, was the $7.5 million bond facility that we managed to obtain with Export Finance Australia. I think that was a feather in our cap. It's a great partnership, a great relationship. It enables further growth for the business and the ability for the business to take on greater work while still conserving its cash holdings by providing these bond facilities. That tends to be a major hurdle for growing companies. And we are, very proud that we went through an audit process with a AAA government rated agency to give us approval for that. We also have the ability to increase or seek additional funds with Export Finance should the need arise in the future for taking on greater amount of work. Another highlight of the period was we did a placement of just over 3 million to sophisticated institutional investors. That was well taken up, well supported, and we reduced our long-term debt to nil. It's been a philosophy of ours. I think we'll talk a little bit about our ability to have managed our cash resources over our growth period, and having that nil long-term debt. I think it gives us the ability to manage cash more effectively and keep a focus on that. The highlights in the boxes are obviously the current share price, shares on issue, just over 1.13 billion shares on issue, earnings per share over the period, with a market cap of, $23 million. The strength in that is the cash at bank at 28.9 million as at the 31st of December. The board and management have come about through, I suppose, both the acquisitions of the company and the expertise in the company, both managing directors and associates and executive management that run both Simpec and All-Type Engineering, along with board members and non-executive board members of WestStar Industrial, represent greater than 50% of the shareholding in the company. And I think that's a true endorsement of our belief in the company. I would love to clarify that, even since the acquisition of All-Type Engineering, all shareholders remain in the company. Nobody has had any interest in selling shares, only interest in growing the company. So I can clarify that. If we could change slides, please. And so if we touch on the financial highlights, we had a record revenue during the period of sub 75 million for the first half. That's almost a 200% increase on the previous half year, which was about 25 million. And that comes about through what we'll talk about during this presentation, new projects, growth, setting up for growth, as I touched on earlier, facilities to enable the growth, facilities to take on more work, effective cash management. The contribution to that revenue, just to clarify, was Simpec about 53 million and All-Type around about 21 million. The EBITDA result was strong at 4.2 million, and it's a significant increase on the first half of last year. I suppose the strong result demonstrates that margin of 5.6% on EBITDA. And I think, it's our intention as a company to focus in on that moving forward and try to increase upon that as much as possible as we refine our process and as we mature as a company. A net profit of 2.35 million after tax was a significant turnaround of the prior period again. And again, highlighting the record cash balance of 28.9 million at the end of that period. I would love to highlight that, we continue to demonstrate our ability to manage cash. I think that's been a very strong asset of the company and the executive and the management. And the net increase of sort of 15.7 million in cash and cash equivalents over the periods. If I could change slides, please. So we've got here sort of, I suppose, the revenue model. It talks about, as I've touched on, $74 million worth of revenue in the first half. I think the chart's really effective in demonstrating, I suppose, the growth of the company and where we're going. You see over the first 4 to 5 years there, incremental steps in growth, and then we can touch on, FY22 in a moment. But the first half of FY22 was, as I said, about 75 million, a 200% increase in the prior period. And to date, on last year's full year, it's a 5% increase already at the half year. We've announced a significant amount of contracts during the period, $222 million of contracted revenue, but 192 million of that was won during the half. And that demonstrates our ability, and I suppose the direction the company's taking. It was made up of a number of projects, one significant project, which we'll come to shortly in the slides. But, the tender pipeline and the general market is strong. Tendering is strong. We're expecting further awards from our tenders. A lot of those tenders are at a maturity stage for a large number of the projects that are being tendered. So our philosophy around revenue and looking forward is continued growth. We're at the maturity phase, I suppose, of the company's strategic plan that's been set out earlier. We've got a good forward order book, which, these things are crucial to sustained earnings over the longer period. So I think that's an important slide to demonstrate where we've been, where we're going, and the way we see the future as far as future pipeline. If I could change slides, please. So I have mentioned, where the revenue is coming from, and what I've chosen to do here is I suppose, choose some key projects or key contracts that we're currently working on. We'll start with Simpec. We'll narrow in on the Iron Bridge project. This was a significant feather in the cap of Simpec. In a short period of time, it's managed to deliver successful projects. It's an SMP and E&I construction value of $145 million. We're well advanced with the works, greater than 350 people on site, with an anticipated workforce of 500 people. We have the right amount of people at the moment to deliver the project, and the project's progressing well. As far as Alltype is concerned, I've narrowed down into a couple of key projects, one over the period as well. Firstly, the Lynas rare earth processing facility in Kalgoorlie. We're well advanced with those works. Also, it's got a contract value of sort of $12 million. SMP and construction works, E&I works, full commissioning and testing. I mean, this is a real feather in Alltype's cap as well. It's a significant project. It's a well-known project. It's tracking well. It's on program as far as our ability to deliver. We're doing well on the project. APA has been a wonderful relationship with Alltype Engineering over a number of years. This is a compression station, $25 million project. Not a lot of people, we feel, can take on these sorts of projects. We are chuffed to be working on it. It's probably the largest project we've worked on for APA, and we are now in a stage where we'll see a strong presence and advancement on site over the coming months. If I could change slides, please. So, looking at outlook and strategy, strong half in FY22 first half. Second half is expected to grow significantly. Simpec continue to deliver on its Iron Bridge project, and Alltype ramps up the APA group and Lynas projects. The great thing about it is the order book of $169 million ahead of us. For clarity, I mean, that's a wonderful position to be in. It's unique to the company. We've worked on trying to build on that forward order book, and I think that from an outlook perspective, that's what this company's about. It's been trying to look forward now, trying to become more mature in acquiring good projects, and being able to set ourselves up for those sustained earnings that I've talked about earlier. Contract revenues are expected to grow over the near term. We expect to win more work, and we're in a strong position, the strongest position we've ever been in, heading into the second half of FY22. We touch on some metrics around the tendered work opportunity. Yeah, it's greater than 400 million. And we, as I said earlier, we're expecting some awards to come from that in the near term. And demand for the services, for our services to the resource sectors, envisaged to remain strong. If we look at our strategy historically and our strategy moving forward, the placement of those bonds that I touched on earlier has had the ability to strengthen the balance sheet. It's enabled us to increase our capacity for future works, which is very important. We continue, I suppose, if we continue to deliver for these tier one clients, continue developing our reputation and our relationships with them, we'll continue to get more awards. This is how this industry works. As far as the group on a consolidated view, we've increased the revenue. We expect to improve on that moving forward. The new projects dramatically contribute to this overhead recovery. And we talked about our growth model. As we increase our revenue, we get better recovery of our overheads. We set ourselves up for this, as we've talked about in a number of earlier statements in the company, so that we could deliver the greater revenue, which would in turn deliver, the margins that we're now seeing come into the group. And we set ourselves up for that. And as I said, we're at that maturity phase now of delivering upon that, and the results speak for themselves. And I suppose we're focused on maintaining that vision, and we'll continue to do so. As far as WestStar, it continues to build on its performance. It also has a very clear focus on safety, whilst trying to achieve that profitability and the cash management that I've talked about during this. It's that strong cash management that enables us to continue to grow and grow those recurring revenue streams. We'll always work on looking for recurring revenue streams, and we'll continue to grow those as the business becomes more mature. And last but certainly not least, people. I've touched on this before. We have to continue to attract and retain, the experienced workforce that we have. There is purely the driving factor behind the key projects that we're on is certainly two very excellent leaders, being the managing directors of both Simpec and Alltype. They have a following. They have a following of experienced people. They have a history, and they have a high level of experience to be able to deliver these projects. And it's us working on our people and retaining our people with those diverse skill sets in these growing markets that we talk about. If I could change slides, please. So, we've presented this slide before, but it's relevant to where we are as a company, and the value that we feel that we are demonstrating. We've talked about the proven leadership team. These teams are now, capable of taking on contracts greater than $100 million. The Iron Bridge example is a pure example where those projects don't literally land in your lap. You've got to have the experience. You've got to have the leadership team. You've got to have the org chart to be able to get those works. It's credit to the managing director of Simpec that enabled us to take on such a large project, and the delivery and successful delivery of that project will bring more. I talked earlier about the increasing geographical footprint. We will continue to look at other opportunities around Australia as we hope that these borders continue to open up, and this pandemic continues to, I suppose, reside. At the end of the day, it gives us the ability to grow in the future. So we maintain that as a focus. The growing reputation with these resource companies, I've touched on during this presentation, delivers the further awards that we're talking about, and it positions us well for growth. The financial performance is something we've been working on for some time. The year-on-year results we've demonstrated through the earlier graph. We're profitable. We're delivering good projects. The projects are profitable. And I think we're quite confident in saying we're undervalued, I suppose, in comparison to our peers in our sector. We'll just change slides. And I've touched earlier on the executive management, but as a highlight, that's an executive management slide with, I'll focus in on the two executives running both Simpec and Alltype. Enormous amounts of experience, delivering great projects over a number of years, strong reputation, strong following, strong skill set. Slide, please. Right, so we get to the end. So, yeah, David, I think that's sort of a brief summary of the half-year results. It's a brief summary of the strategy and the outlook of the company, and we're really pleased to have delivered what we see as a strong result. There's always room for improvement. We'll continue to refine our processes, but we're happy to have delivered what we feel is I suppose, a strong half year.
Thanks, Rob. Great presentation. And as you say, a strong half year for WSI. A couple of questions relating to people. So, it's a tough market, borders closed. It's tough to get people. You've proven you've been able to get people to fill the jobs in your current order book, but are you experiencing sort of employee or workforce pressure? And are you confident of maintaining your employee numbers into the new jobs moving forward?
Yeah, it's obviously a huge focus, and it's not unique to us. It's it's across the board. I think the way to answer that is to be to look forward. By way of example, Iron Bridge was a project that we were looking at quite early, and we had to start recruiting early, expressions of interest early. We have a number of full-time recruiters in-house, so that those recruiters are recruiting, specifically for us, and we're not effectively, I suppose, sharing in a pool of others. Through, we are supported through third-party recruitment as well, and we value that. But I think at the end of the day, I think what it comes down to is people are looking for. Strongly believe, or we believe that people are looking for projects with longevity as well. And I think if I touch on, the key projects I've talked about today, and I can't talk about all of them, but to answer your question, Iron Bridge is a longer project. And I think that people look at that, employees look at that, and they look at that from a comfort perspective. And, I think it's well remunerated. So at the end of the day, it comes down to remuneration. It comes down to, what you can provide your employees. It comes down to longevity and sustained earnings of the business. And if you can demonstrate, which is what we're trying to do today, and we continue to do with our employees, sustained earnings and revenue over a longer period, people have the confidence to join the group. Yes, it is challenging. It has been, but we are right now, as of this moment when I speak, we are armed with the right amount of people to perform the current projects that we're performing on. So hopefully that sort of gives you a bit of an indication. Yep.
Step back 12 months, and you were sitting there with the management and the board of the company, looking forward to what the next 12 months could look like. Have you met or exceeded expectations, or is this exactly what you thought you would deliver?
Yeah, I think we've met our expectations. I think the key project around Iron Bridge was, I think, a feather in the cap. I think, again, I talk about tender book earlier today, and to be able to answer that question, you've got to look forward. And I suppose we were looking forward at that time. We certainly were wanting to grow on the strategic plan that we had, and the strategic plan basically outlined growth in revenue because it was required to run an ASX listed company. You need a bigger platform. And I suppose at the end of the day, we've talked about earlier how we geared up the overhead accordingly, and that was in advance. You have to do that early. So sometimes in a financial year prior to this one, you might take a greater overhead on board because you're confident in your people and your ability to take on new projects. So we did that. So that, I think the answer is without the answer coming across too arrogant, it was purely a focus to grow that revenue and grow the projects. We know we've got the people to take on the work. We know we've got the expertise, and we know we've got the ability, and we are becoming a real player, in Western Australia, and we are developing a strong reputation for it.
I'm not asking you to give guidance, but as you stand here now looking forward for the next 12 months, what are your expectations?
Well, we've touched on, the forward order book. I think at the end of the day, there's $169 or so million remaining. That will grow, and we'll continue to turn that work over. Our expectation is the sectors that we work in remain strong. If we look at our tender book, which I can't go into detail on, and we look at that, that's strong. As I said earlier, I think that for us, it's about getting that workload into the funnel over a longer period of time. And I think that that's what we've been demonstrating, we've been doing. If you reflect on the growth chart, you look at the journey, where we've come from. So look, my expectation is more of the same and more growth for the group. We're at a young phase, but we are really now starting to take on more mature projects. So we're in that maturity phase. So we envisage that that we'll continue to deliver on that strong order book and continue to grow that strong order book moving forward.
Now, I've got a couple of questions that are balance sheet related, so hopefully I'm not putting you on the spot. Contract liabilities in accounts, what is that made up of, and how normal is that in the mining services sector?
Well, as far as normality on the mining services sector, I look at the way we report is under a standard. So it's a AASB 15 standard. So it all comes down to revenue recognition. So at the end of the day, it's more of an evolved answer than a quick 1 minute answer. But if you look at the projects, if you look at the receipts from a quarterly perspective, and you look at the revenue recognition, you've obviously got to allow for deferred costs and deferred income over a period. So you'll see that I think the receipts were $99 or so million from a quarterly perspective, but we reported $74 million in revenue. So that's what they're made up of, deferred costs.
Now, I do have a question here about expected second half revenue, and you may not be able to answer it without giving a guidance, but what comfort do you have around revenue going into the second half?
Your question is as far as how much revenue or?
Yeah, an expectation on your revenue. What do you think revenue, without putting a forecast there, how comfortable are you around revenue growth into the second half?
Well, as I touched on a minute ago, if you look at the receipts, that was circa 100 million as at the last quarterly. So you can effectively bank that prior June. And then on top of that, these projects are starting to scale up. So, the revenue that we have outstanding, I would say to you that a significant amount is currently being delivered through, January to March and continue to be delivered through to June. Some of these projects, dependent upon deliverables and so forth, is dependent upon how much you get through. Certainly, we won't be getting through the entire amount. That's I can guarantee you of that. It's our intention to try, but certainly the programs don't necessarily call for that. But a significant amount, yes.
Now, this is a
question.
But
as we mature as a company too, sorry to interrupt, as we mature as a company and we go further, it is expected that, when you have forward revenue and you become that the earnings are more sustained over a longer period of time, it will probably give us the ability in the future to be able to forecast those numbers that you're asking. That's another clear intention of ours moving forward.
So this half really is laying that foundation stone to build both from profitability, revenue, NPAT, EBITDA, all of those things. It's a watershed half looking forward.
Yeah, look, it is, and I think that I think it's very clear that if you look at the forward order book and what's ahead of us, that we will deliver strong revenue. For us, it's about improvement now, and I suppose if I was to reflect on what we've discussed today, it's a continue building on the performance. We continue to demonstrate those cash management principles, the low debt levels. We've created a platform for the subsidiaries, both Alltype and Simpec, to deliver this revenue that we talk about, and that's through strong management principles, through ethic financing facilities. All of these things go together to culminate into, I suppose, what will be a strong half moving forward. I think for us, it's more of the same, but it's now about tweaking the performance as we move forward and as we mature as a business. I think effectively we're in the strongest balance sheet position we've ever been in. We're fully funded. It gives us the ability to execute on this significant order book that we talk about. So for us, we've never been in a better position to deliver that revenue. So to a certain degree, you've got to set yourself up for success. And today's been about sort of reiterating and the processes that we've been through to now to be able to deliver on some of that revenue.
Now, I love having brokers and analysts on these types of calls because they ask very direct questions. So I'll put them to you in a very direct way. With nil debt, record cash balance and bonding in place to manage growth, should investors expect to continue to see the company transition into the ability to pay dividends into the future?
Yeah, it's a great question. I've got to be careful on the answer, but as the executive, look, I think the type of business that we're setting ourselves up for that in the future. If we continue to deliver strong profitability, it certainly would be a discussion that would be had internally. It's certainly a bit of a vision for the company, and I think that there's no reason why we couldn't, on the basis that we continue to do what we're doing now. I talk about maturity a lot, and I think that answer is in the maturity phase in the strategic plan that we look at the moment. So yes, we're heading towards that direction. Don't put me on the spot and ask me when that's going to happen, but certainly you continue to deliver halves like this and strong full years, then it's a natural progression. And I'm sure that all our shareholders would love to see that and love to see those returns. I think that we can clearly say that we're effectively managing the cash at the moment very well. There is a strong history of that, and so we're using the cash for growth in a growth model at the moment. As we mature more, then those considerations can be worked through.
Another direct one from, and I won't name him, but another prominent broker. But are there any M&A opportunities that would complement your two subsidiaries that would grow earnings, diversity, and profitability? And is it something that you're looking at?
Yeah, there are, and in my role, I'm happy to say that I look at that every day. There are a number of opportunities. We have to be very careful, though, as a company, that particularly in Western Australia at the moment, people have had strong results. And I think that the values of those businesses need to be assessed based upon longevity and not just the current periods that we've been through, particularly in the resources sector and the services sector to that area. So companies that we are looking at, there's some great companies out there, but you've got to get them at the right stage. All type engineering was I suppose an example of that, but we invested most heavily in the executive, and that's what interested us about that company. And that company's we've been able to transact on that company. They took up ownership in the business, and they've worked with us now to grow that company. And I think it's that philosophy that we'll continue to look at moving forward. We're organically growing well, but it is always a focus of ours to look at M&A opportunities. Absolutely.
Again, another couple of direct questions from some prominent brokers, both here in Western Australia and over East. In terms of the cash balance, is that made up of any deferred payments or anything that may impact that going forward? Keeping in mind it is a considerable cash balance and you do have bonding facilities.
Yeah, I think if you look at the cash balance, it was strengthened by a couple of things during the period. Keeping in mind we raised $3 million, I did a raising of $3 million. We released, with the bonding facilities, we released circa $5 or $6 million in cash. So we funded this business up until now purely with our own cash. And I suppose what that's done is that's in itself contributed $8 to $9 million to the cash balance. reporting cash balance periods, I'll be very clear, is a moment in time. At the end of the day, we capture the receipts at a point of time, and that's what we've done with that cash balance. Generally across the board, you have progress payments that are either in advance or in arrears and so forth. Generally, it weighs itself out. I think that what we've been successful in doing, and I continue to highlight this, is that, we've only entered into contracts that we've been able to manage. So, Iron Bridge is a good example. Without going into too much detail on that, because I can't, but, we effectively took on a contract with our client that set ourselves up for success. And by that, I mean is that you can't enter into contracts where at the end of the day, you're up against it from day one. So yes, it's a strong cash balance, but it's been demonstrated over a long period of time, and it continues to grow. If you look, it continues to grow at a very similar rate over the future periods.
So, Rob, if I leave you with sort of one message to shareholders, investors, and potential shareholders and investors, what is it? What's the next 12 or 18 months they should be focusing on, or the 6 months they should be focusing on, why they should be investing in the company? Keeping in mind, we're not giving investment advice. And if they do want to take investment advice, please take that from the appropriate people. But what's the message you want to give the market?
It's just reiterating what we've gone through today, I suppose, to a certain degree. I think, as I said, we've continued to deliver strong results. I think we've demonstrated our ability to grow the business. I think we've demonstrated our ability to take on major contracts, and I think that it's demonstrated to investors that we're at a maturity phase of where we're at as a business. We carry very little debt, we'll carry zero debt. And at the end of the day, we've managed our cash effectively. We are profitable. We've set ourselves up for success by establishing facilities for future growth. We've talked today about the forward order book. We've never been in a position we've had such a strong forward order book. That continues to grow. I think for us, it's more growth. And I think that what we mean by growth is taking on more contracts, delivering them effectively, growing, into other areas, growing in speciality and expertise. And it's that growth that we've set ourselves up for with the right management, the right executive, to deliver the profitability that comes out of that. And I think we're at a sweet spot with where we are at the moment. We've talked about getting here, and I suppose it's more of the same, David. It's just delivering on these projects. We'll continue to deliver. And we'll continue to take on new projects, and I think that the results will speak for themselves. I've said that, I think, in our last few interviews. The results will speak for themselves, and they are at the half year, and we should be proud of our executive in delivering the result. But we'll continue to refine and dig in and try and improve upon that. We're not resting on our laurels. We think there's room for improvement. I've touched on that in the half year report, and we'll continue to refine our processes to deliver a better result moving forward.
Rob, a great presentation, delivery of a fantastic half-year result. And if more of the same is profit, cash balance growing, a strong EBITDA and a strong order book and keeping your team together and expanding, then it's certainly a company to watch. WestStar Industrial, stock code WSI. Rob, thanks for your time.
Thanks for having us, David.
Thanks, everyone, for your attendance. A copy will be available on the PIC Magazine YouTube channel in the next hour or so. If you do have any questions, please feel free to send us a message, and we look forward to keeping you all updated of the quality work of WSI, not just in the short term, but in the long term